Today on Clearing the Clutter Inside and Out, we're talking about clearing our clutter in our finances. Do you know what your credit score is? Are you losing money because you don't have a good credit score? Do you know other ways your credit score may be affecting your life? Let's continue our month focusing on back to school. Are you ready to clear your clutter and share your gifts with the world? Every Tuesday at 1 p.m., join me on Clearing the Clutter Inside and Out as I teach you how to navigate the waters to declutter your life, get organized, and become more mindful. I'm an award-winning professional organizer, author, and certified life coach, and I destroy the box and examine clutter in all areas. Every episode, I'll give you take action steps that you can easily apply to your life. Come on, let's get started. Today's episode was inspired by our somewhat recent car purchase. And as a side note, if you name your cars, they last longer. This is a scientific study done by yours truly with every car I've ever owned. We now have Minerva, a Subaru Forester. When we went to get Minerva, they ran a credit score check. Both my husband and I had credit scores in the 800. I was a little higher and had to tease him about that. Because of this, we were able to get 0% financing for 4 years. If we had poor credit, we probably wouldn't have been given that deal. Instead, we'd be losing tons of money paying interest. Many of us are seeking financial abundance. How can the universe deliver if you aren't doing your part? That's why I talk about outer clutter, the physical clutter, financial clutter, as much as the inner clutter. They are both equally important. I know many people who are wonderful beings, wonderful at healing, entrepreneurship, and doing what they do, but their finances are a mess. They could be serving more people, having financial abundance, but their finances are in a mess. Know that no matter what, you can improve your score. Why should you care what your credit score is? You will most likely have higher bills because you are considered a risk. This includes cell phone providers, insurers, and even utility companies. They may worry about your score and charge you fees or higher rates just in case. Are you thinking about buying a home or renting? After rent-to-income ratio, your credit profile or score is the second most important factor a property manager considers when reviewing an application. A landlord may not feel comfortable having you as a tenant. This also affects your mortgage rate. We have a 3.5% interest, which is pretty good, and we are still paying thousands of dollars each year. Imagine if that were double. I don't know about you, but I'd rather spend it on a vacation, getting a massage, something fun, not paying the bank. Or if you found the house or apartment of your dreams, your score might affect whether or not you could get it. Your love life. When doing research, I found this out. A recent Bankrate survey found that nearly 4 in 10 adults say knowing someone's credit score will affect their willingness to date that person. A 2015 report from the Board of Governors of the Federal Reserve found that your credit score may affect who you end up with romantically and how long you'll stay together. The better the score, the stronger your relationship may be. Loan approval. Your credit score is the biggest factor in determining your auto loan rate. Higher interest rates if you have a bad score. Here's something else I learned. Employers in most states have the right to run credit report. That's the document that's reflected in your credit score. They can do this on prospective employees. The version of the report presented to employers is not exactly the same that a lender would see, but it can still bring major red flags to light. According to LearnVest, 47% of employers run credit checks on job candidates primarily to reduce the potential for theft and embezzlement, reduce liability for negligent hiring, and assess trustworthiness. What's your credit score? Do you even know your credit score? You might not, and it is important that you find out. We found out our latest credit scores when applying for a loan for our car. A FICO, F-I-C-O, score is a type of credit score created by the Fair Isaac Corporation. Lenders use borrowers' FICO scores, along with other details on borrowers' credit reports, to assess credit risk and determine whether to extend credit. Your FICO scores only look at information in your credit report. Your credit score is calculated from your credit report. Most of this information comes from the Consumer Financial Protection Bureau. I encourage you to check it out. It's www.consumerfinance.gov. consumerfinance.gov. There are 4 main ways to get a credit score. Check your credit card or other loan statements. Many major credit card companies and some auto loan companies have begun to provide credit scores for all their customers on a monthly basis. You can talk to a nonprofit counselor. Nonprofit credit card counselors can often provide you with a free credit report and score and help you review them. Use a credit score service. Many services and websites advertise a free credit score. But before you sign up to try one of these services, be sure you know what you are signing up for and how much it really costs. Buy a score. You can buy a score directly from the credit reporting companies. You can buy your FICO credit score at myfico.com. Are you tired of being stressed out every time school begins? Would you or your child benefit from being more organized? Ready to be on top of it all and achieve your goals? Our successful school year, get organized, clear clutter, and gain peace of mind, Facebook Mastermind community can support you. Begin September 6th. More information at reawakenyourbrilliance.com under Life Organization Masterminds. Tip: go to annualcreditreport.com to view your credit score once a year. Because of the Fair Credit Reporting Act, every person is entitled to a free credit report once per year from each of the major credit bureaus: Experian, TransUnion, and Equifax. You can also request these reports by calling 1-877-322-8228. That's 1-877-322-8228. How to improve your credit scores. Keep balances low on credit cards and other revolving credit. Pay off your debt rather than moving it around. Don't close unused credit cards as a short-term strategy to raise your scores. Don't open a number of new credit cards that you don't need just to increase your available credit. More tips. Dispute errors. Mistakes happen. You can dispute errors online through Equifax, Experian, and TransUnion. Negotiate. You can't deny that you stopped paying a bill when you were unemployed, but you can ask creditors to erase that debt or any account that went to collection. Write a letter offering to pay the remaining balance if the creditor will then report the account as paid as agreed, or maybe even remove it altogether. Note: get the creditor to agree in writing before you make the payment. You might also be able to ask for a goodwill adjustment. Suppose you were a pretty good credit card customer until that period of unemployment, when you made a late payment or two, which now show up on your credit report. Write a letter to the credit card emphasizing your previous good history and ask that the mistake be removed from the credit report. It could happen. Be kind, do all you can, and then let it go. Check your limits. You don't want it to look as though you're maxing out each month. If the card issuer forgot to mention your newly bumped up credit limit, request that this be done. Get a credit card. Having one or two pieces of plastic will do good things to your score if you don't charge too much and you pay your bills on time. Underuse your cards. Don't use cards to pay for everything. The credit utilization ratio should be no more than 30% and ideally even less. A 10% credit utilization ratio will maximize this part of your FICO score. If your Visa has a $1,500 limit and you routinely charge $1,000 a month, it doesn't matter if you pay it all before it's due. What matters is the credit bureaus think, using 2/3 of his credit. What a spendthrift. Raise your credit limit. Ask your creditors to increase your limit, making that MasterCard good for up to $3,000. Be careful with this one, though. It works only if you can trust yourself not to increase your spending habits. Don't close any cards. Canceling a credit card will cause your available credit to drop, which doesn't look good to a bureau. One way to keep a card active is to use it for a recurring charge, such as a utility bill. Pay your bills on time. Your payment history, including the ones you pay late or skip, makes up 35% of your FICO score. Take actions from today's podcast. Find out your credit score. Can you determine if your credit score has negatively affected your life?